Hey everyone, it's me again, Keisha from KD Investing. The stock market is down. Everyone is panicking, but you're about to learn how to make $100 a day in passive income safely, even in a bear market. You don't need to be a day trader. You don't need thousands of dollars. You just need the right strategy. So if you want to make consistent money while the market is falling, hit that like button and subscribe. Let's get into it. First, let's define passive income. This means you're making money without actively trading every day. You set up your investments and they pay you daily, weekly, or monthly, even while you sleep. There are 5 powerful ways to do this in a down market, and I'm going to break them all down for you. Let's start with the first method, selling covered calls. This is a low risk strategy where you collect money every single week just by holding stocks you already own. Here's how it works. You own 100 shares of a stock like Coca-Cola or Apple. You sell a covered call option, which means you agree to sell your shares at a certain price if the stock reaches that level. In return, you collect a cash premium up front. Let's say you own 100 shares of Coca-Cola at $55 per share. You sell a call option at $57 and someone pays you $100 right now. If Coca-Cola stays below 57 cents, you keep your shares and the $100. If it goes above $57, you sell your shares at a profit and keep the $100. The best part, you can repeat this every single week to generate steady passive income. You can do this with stocks like Apple, Microsoft, or even ETFs like SPY. This strategy alone can make you $400 to $500 per month per stock. Now, let's move to the second method, dividend ETFs. Instead of buying individual dividend stocks, dividend ETFs spread the risk across multiple companies while still paying you passive income. Some of the best dividend ETFs for a downturn include SCHD, one of the highest paying dividend ETFs, VYM, a safe and steady dividend ETF, SPHD, pays monthly dividends, which is perfect for passive income. Let's do some quick math. If you invest $10,000 into SCHD, which has a 4% dividend yield, that's $400 per year in passive income. But if you keep reinvesting those dividends, your income grows every single year. The best part, these ETFs tend to recover faster when the market bounces back. So you're making money now and setting yourself up for long-term gains.
Now, let's talk about method 3, selling cash secured puts. This is one of the safest ways to generate income in a bear market. A cash secured put means you get paid to agree to buy a stock at a discount. Let's say Apple is trading at $170 per share, but you only want to buy it at $160. You sell a put option at $160 and get paid a premium, let's say $150 upfront. If Apple never drops to $160, you keep the $150 for free. If it drops, you buy Apple at a discount and keep the $150. By selling just one cash secured put per week, you can easily generate $100 plus per day in premium payments.
Now, let's move to the fourth method, REITs or real estate investment trusts. REITs allow you to earn real estate income without owning property. These companies collect rent from commercial buildings, apartments, or storage units and pay out 90% of their profits as dividends. Some of the best REITs for passive income include Realty Income, pays dividends every single month of stag, industrial real estate with a solid dividend yield, VNQ, a real estate ETF that spreads the risk across multiple REITs. If you invest $5,000 into Realty Income which has a 5% dividend yield, that's $250 per year in passive income paid monthly. REITs are one of the best ways to earn steady cash flow while waiting for the stock market to recover. Now, let's move on to the fifth and final strategy, bond ETFs. When the stock market is down, bonds go up. Instead of keeping cash in the bank, you can put your money into bond ETFs that pay you interest every month. The best bond ETFs right now include BND, a total bond market ETF with consistent payouts, TLT, a long-term treasury bond ETF that does well when stocks drop, SY, a short-term bond ETF with lower risk, Here's why bond ETFs are great for passive income. They pay monthly income. They're less risky than stocks. They balance your portfolio. If you invest $10,000 into BND with a 3.5% yield, that's $350 per year in passive income, completely hands off. Now, let's put this all together into a daily passive income plan. Monday, sell a covered call on a stock you already own. Collect $50 to $100 in premium Tuesday. Invest in a dividend ETF like SCHD. Earn passive income over time. Wednesday, sell a cash secured put on a stock you want to buy. Collect $100 in premium. Thursday, buy shares of a REITs that pay monthly dividends. Friday, allocate some money into bond ETFs for extra passive income. By combining these strategies, you can easily make $100 per day or $3,000 per month in passive income, even in a bear market. And the best part, it's safe, repeatable, and scalable. Which of these strategies are you going to try first? Let me know in the comments. If you want more step-by-step guides like this, subscribe and turn on notifications. Your financial freedom starts today. Let's build it together.